Thanks for joining us on another edition of the Small Business Show with Jim Fitzpatrick.
Hey everyone, Jim Fitzpatrick. You're watching another edition of the Small Business Show right here at ASBN.com. If you're looking to raise capital in the year ahead, knowing how investors evaluate startups can make all the difference. Today, we are joined by George Deeb, who's an author, Forbes contributor, and managing partner at Red Rocket Ventures. To join us, he's going to break down the essential framework investors use. This is kind of the inside, taking an inside look from an insider as to exactly what happens here. So the 4 M's. Talk to us about the 4 M's, George Deeb.
Jim, good to see you again. The 4 M's when an investor is thinking about making an investment in a startup, it starts with the first M is the market. The second M is the model, the business model of the startup.
Okay.
The third is the management team. And the fourth is the momentum. And we're looking for, making sure they check each of those 4 boxes before seriously kind of digging in and assessing the business.
Okay, that's great. While you were saying that, I was wondering in my mind, do I have all of those 4 things? So let's talk about each one of those then, in terms of what the investors are looking for. Let's start with the market.
All right. So with the market, you want to make sure that the startup is operating within a large and growing industry where there's limited competition that can enable quickly scaling revenues of that business, where that business preferably is a first mover would be great, but an early mover is also acceptable. So you're really looking at the external dynamics that the company is operating within to make sure that your business has a fighting chance for success and scale. Okay.
And when you say market, you don't necessarily mean geographically. You mean more dollars and cents. How big is it? A $1 billion market? Is it a million? 100 million? Right?
Yeah, for sure.
Yeah.
I mean, for me, the minimum market size, if a venture capitalist is trying to invest in a startup with at least 100 million of revenue,
okay,
and that startup has at least 10% market share, and most 10% market share, you're looking for a business that is operating within $1 billion industry. So if the business is not operating with at least $1 billion of industry, it's going to be really hard to kind of build a business large enough. And one of the examples I kind of like to use is in the travel industry, an investor would much rather invest in Expedia, right? They sell everything and anything under the moon for travel, airline tickets, hotel rooms, cruise line, whatever it is across all destinations across the world, than they would in a whitewater rafting company that simply serves, the Colorado market.
Yeah.
So you're looking for scale.
Yeah, for sure. And that's, talk to us about the model.
Yeah, I mean, with the model, you're really talking about what's the revenue driver of this business? Is revenues coming from product sales? Is it coming from advertising sales? Is it coming from subscription model? Some revenue models are harder than others to kind of scale and operate within. That's the first thing you're looking at. The second thing you're looking at is what are the unit economics of the business? What is their average order size compared to their cost to acquisition? Obviously, the more profitable the unit economics, the more it's going to get the excitement of the investor. And at a minimum, you want to shoot for a return on ad spend of around 5 times or better, right? So if you can prove that you're returning at least 5 times on your marketing investment, that's a good signal to the investors that the unit economics are solid.
Okay, gotcha. And then in terms of management, this is a big one, right? Because I know that friends of mine that have had very successful exits, guess what? There's a ton of money that investors are like, oh, we'll give them money because we know that they know what they're doing and they've had a lot of wins already, but not so much on the entrepreneur that says, well, I haven't exited any company and I'm a young entrepreneur, but I got a great idea, right?
Yeah, well, the team is everything. I mean, you're making a bet on that team, those people, and those people are the ones that are going to be holding and managing your money for the next several years, and you really got to make sure they got the right team in place. So for me, a good management team is one. Do they have a very clear vision on kind of what they're building? They're all in sync and in lockstep with each other, that they're building this exact same thing. Second, do they have experience in the industry, and do they have experience with startups so that they know what this project is all about, and they have a higher odds of success than other executives that don't? Does the team have a history of working together, or is this their first rodeo, right? You want to see at least 6 months of people working together, rubbing shoulders together, getting in the mud together,
Sure.
and they live and breathe and not kill each other in the process. So you want to make sure it's not a brand new team that's never worked together, because the investors will be really worried about that.
Right.
And that doesn't even talk about some of the softer things. How credible is the team? What's the personality fit with the investor? What's their listening skills? Are they coachable? Some of that kind of stuff is what the investors are looking for.
Sure, sure. And then what are they looking for in your momentum?
Well, to me, the momentum is the most important thing. I like that even more than some of these other things, because it's really what gets the investor excited. If you can prove that the rocket ship is starting to take off, that will get their attention more than anything else. It doesn't really matter what the product is at that point, as long as you can prove it's starting to scale.
Yeah.
But for here, you're talking about the speed of customer adoption. What is the proof of concept of this business, and have they hit that proof of concept? And the more momentum you can prove in terms of revenues, customer traction, contracts that are being signed, whatever that metric is, the better the investors will react.
Sure. So what if you are, too early for revenues? What if, or even to see whether or not you've got any momentum? I mean, there's obviously entrepreneurs out there that have got a proven concept, in the sense that people, and I'm going to back up here because I just said too early before revenues, but maybe it's very, very small. But if given the right fuel, that being the cash and the investments from the investors, that you can grow this thing very quickly. So do you then look more at the management team in place and the product or service itself, and understand that, given the right amount of gasoline here, we could really get going?
Well, it kind of depends on the industry. I would say for most industries, for most businesses out there, you got to have some revenue, some sort of traction that will get people excited that, people are buying this product, and hopefully those revenues are growing, and you can show to the acceleration of the revenues.
Yeah.
There are industries where it's almost impossible to do that. Like, think life sciences, right? So that's a very long development cycle where they have to run through years and years of development and proving out their model and FDA approvals, or whatever it is.
Mm-hmm.
So in that case, it's less about revenues at that point and more about where are they in the typical development calendar and schedule, and are they hitting those established benchmarks or not?
Right.
So if you can speak to, you've got to benchmark number one, great. That will make investors excited that are looking for that first benchmark. If you got to benchmark two, that will make the investors looking for that second benchmark excited. So there are ways to raise capital prior to revenues, but it's mostly for industries where, revenue generation is going to be, 5-10 years down the road. Sure.
I know founders of companies that have told me that in the beginning, they spend as much as 50% of their day, or in some cases more, looking for capital. Have you found that to be the case among entrepreneurs and small business owners that have got an idea, that are, they're setting out, and their number one job each day is to now find capital and find investors?
Yeah, I don't disagree with that point. I mean, I've run a handful of businesses, and most venture capitalists are not giving you 5 or 10 years worth of capital to play with.
Yeah.
They're giving it to you in 1 or 2 year chunks.
Right.
So the minute you've closed that first chunk, you immediately got to start thinking about that second chunk and starting to make sure you're hitting whatever targets you put in that first chunk. You better be hitting them, or that second chunk won't be waiting for you. So
that's right.
Yes, capital raising is always part of your thoughts, for sure.
No question. Any closing thoughts on this topic?
Yeah, I mean, I would say the venture capitalists are looking at thousands of business plans each year, and maybe they're investing in 5 to 10 of those stories. So the odds are not in your favor, and you really got to have a story that's going to break through the clutter. That's number one. Number two is, don't blow it with your first pitch. Do not hit them too early before you think you've got all the check marks next to what they're looking for. Make sure you have all 4 M's in place. And if you don't, you got to bootstrap a little bit longer until you do.
Yeah, for sure. And don't give up, right? Just because, 5 different investors have told you, hey, it's just not me, I don't believe in this, or I don't believe in that, I'm not feeling this, or whatever the case might be, do not give up. The money might come from the 50th pitch that you gave, right?
Yeah, for sure. I mean, you could have 100 investors that you've outreached to, and they will turn you down for various reasons
Yeah,
that may not have anything to do with your business,
that's
right?
right.
Maybe it just doesn't fit their criteria or whatever it is. So
Yep,
yeah, keep trying. You're gonna have 99 no's, but you only need that one
that's
yes,
all you
and you
need.
got to make sure you can find that one yes.
That's right. That's right. And I would imagine it's safe to say if once you've gotten that first round of funding, I don't want to say easy, but the second round, the next round should be easier, a lot easier, right? Especially if you've gotten more business under your belt, more sales under your belt, more proof of concept out there, right?
Provided you're providing the traction that you just talked about,
Yeah.
right? If you raised your first round of capital and then revenues go to zero, you got a major problem, right? But if you
More
raise,
money's not going to fix that.
but if you raise the capital and you hit the benchmarks that you set out to hit, well, the money will definitely be there for you on the back end.
That's right.
But what happens if you're in the middle? Well, you were shooting to grow from 1 million to 10 million with that round of capital, but you only got to 5.
Right.
Well, the investors will be sort of happy, right? You're sort of signaling some growth and success, but you didn't quite get to where you said you were going to get, so they're going to be slightly disappointed. But that shouldn't hold them back from helping you raise that next round of capital. It'll just be a little bit harder.
Right. Now, as an investor yourself, you've been in this situation and this table so many times with investors and listening to pitches. Do you kind of say to yourself, he's saying 50, he's saying 10 million, or she's saying 12 million, but we all know if he comes in at 5 million, job well done.
Yeah, for sure. I mean,
Yeah.
an entrepreneur is naturally going to be optimistic,
Right.
and wine and roses and everything's perfect, right? The reality is, us as investors know, very rarely will the set out business plan actually be hit exactly the way it was set up to start with.
That's
So,
right.
we know going in is going to get a haircut from whatever the entrepreneur is suggesting, just based on history.
Yeah.
But you plan for that accordingly, and hopefully the investors are safe in the way they're thinking about it.
That's right. That's right. George Deeb never lets us down. Thank you so much, sir, for coming back in again and sharing this kind of knowledge. I know it is invaluable to many of our viewers. Partner at Red Rock Adventures, George Deeb. Check him out online. People can connect with you through LinkedIn, right?
Yeah, of course. I'm on LinkedIn.
Perfect.
LinkedIn /in/George Deeb.
Maybe you've got a great idea that you want to run by George and see, hey, I'll get you in early on my idea here, right?
Sounds good.
All right. Thanks so much.
Thanks, Jim.
Thanks.
Thanks for watching another edition of the Small Business Show with Jim Fitzpatrick, exclusively on ASBN.com.